All right, we're going to get started. Hello, and thank you everyone for joining us. My name is Kathleen Latuca. I'm the engagement manager here at SeedPod Cyber. Welcome to Cyber Insurance Demystified, a part of our ongoing webinar series. I'll be on mute during this presentation, and everyone else will be on mute as well. So please feel free to use the Q&A function at the top there and ask any questions at any point during the presentation, and we'll get to them at the end of the session. This webinar is being recorded and it will be available on our website tomorrow. And we are also publishing our ebook titled How to Fill Out a Cyber Insurance Application with Confidence that we'll be sending over later today. Thank you for joining us, and I'll hand it off to Doug to get started.
Thanks, Kathleen, and welcome everyone for joining us today. And I look forward to talking about cyber insurance and what's going on in the marketplace right now. Just want to give a little bit of background on who we are at SeedPod Cyber. We're a relatively new company. We are a cyber insurance managing general agent, and we are also a broker who partners with managed service providers to provide insurance to their clients. And the reason that we partner with managed service providers is because they typically have the expertise and the tools to help their clients be secure. And as we'll learn about over this session, carriers are really looking harder at the controls that are in place. And so it is important that you have, as a business, someone that you can count on to provide those solutions here. Just a way of background on myself. I've been 20 plus years running insurance programs and affinity for a large U.S. broker. Left a few years ago to focus in the cybersecurity and cyber insurance space. I noticed Kathleen in the marketing materials was kind enough to call me seasoned as opposed to old. So I do appreciate that, and hopefully that seasoning brings a little bit of experience through this presentation here. I'm going to just outline what we're going to talk about. So we're going to start with just a brief overview of what is cyber insurance. I'm not sure the level of experience that those of you on the call may have with regards to cyber. So we'll spend a little bit of time describing that. We'll talk about a brief history of cyber insurance, in particular with what's going on today in cyber and why. We'll spend a little time on what carriers are looking for these days, talk about how much coverage do I need. We'll review some coverage traps that you may want to be careful of as you're evaluating your cyber insurance. And we'll also talk about application ABCs, how to put together an application and fill it in the right way. And then finally, just 3 takeaways. If there's nothing else that you walk away with from these meetings, kind of 3 broad takeaways that I'd like you to consider. So let's just talk briefly about what is cyber insurance. And if you want to geek out either from a cybersecurity standpoint or an insurance standpoint, you could perhaps use this as a term. Cyber insurance covers you in the event of a malicious or unintentional act that impacts the confidentiality, integrity, or accessibility of your system. And if you're not geeking out on any of that and don't understand that, you could probably use this phrase instead, that it covers you when bad things happen to your system or your data that harms others or harms yourself. And that's, again, broad terms, but that's in general what cyber insurance is. There's a few examples of incidents that in which cyber insurance may play a role and cover. The first is a data breach, and that's when someone gets into your system or your system is exposed, in which someone could potentially get into your system and extract data often, and they could sell it or they could use it for themselves. But in any event, it is an attack on your system. If you want to find out, I just put one example of a smaller firm. There's certainly a lot of examples of big firms who have suffered data breaches over the years. But I want to make sure that this isn't just presented as an incident that only affects the big companies. This can affect small companies as well. Here's one example of a family practice center that was hit. Over 80,000 records were exposed, and this is also because it's a family practice center. They are HIPAA compliant, so there's a number of issues that certainly go on with this firm, and hopefully they're covered by cyber insurance. And for those of you who think you don't need it because nobody will sue you, I just Googled this, and the first three search results were all from law firms telling you or asking you if you've been impacted to contact them because they'd love to represent you in a class action suit. So perhaps there is some merit to having cyber insurance because you can't really keep it private. Others will know about it here. Ransomware is another cyber incident that is typically covered by cyber insurance. This is a map of the United States that the circles on the map are incidents that occurred really over COVID from 2020 to today. We'll talk more about ransomware. It's had a big impact on where we are with cyber insurance, but ransomware is certainly where the bad guys get in. They take over your system. They encrypt the access and data, and in order for you to get that back, they're asking you to kindly pay them a ransom, often in Bitcoin or some type of crypto, and for you to get the keys back. Then there's a variant on both of these, which is kind of a hack witch. It's a ransomware plus data breach. So, and this is something that really started over the past couple of years, and is very common now, where not only do the bad guys take over your system, but they also take some data, or at least say that they've taken data, and they use that as leverage too to get you to pay the ransom there. The other examples of cyber incident that fall into the category of what could be called e-fraud. And in some cases, in most cases, there are coverages under your cyber insurance policy that will cover this. Sometimes you might have to get this through your crime policy, but e-fraud includes computer fraud. That's when someone hacks into your system and is able to transfer or create take over fraudulent activity within your system. There is social engineering, in which someone pretends to be someone else and induces you or someone to transfer money to them. There's also funds transfer fraud, which is specifically focused on transferring money out of your bank account through by accessing the system there. There are three basic broad components to a cyber insurance in terms of what it covers. It covers and provides payments for lawsuits, for costs incurred. So the costs incurred that you would incur, such as getting your systems back up and running, to paying for forensics, paying for those letters that you have to send out in the event of a data breach, or for credit monitoring. Also, in certain situations, if you do have to pay the ransom to get your system back, that's where this falls. And then lost profits. There's something called business interruption, which is typically found in property policies. This covers the lost profits while you are down, and or the extra expense that you have to incur while your system is down in order to keep things going. So these are the kind of the categories of cyber insurance. So that's kind of just a brief overview of what cyber insurance is at a very high level. I just want to kind of give an overview of kind of the history of cyber insurance, and really, arguably it started in '96. It was around that time of when close to the beginning of the internet. But for the first 20 or so years, it was, and certainly in the latter part of, from 2015 on, it was relatively simple to get for smaller firms and medium-sized firms, and with relatively little questions being asked. You could give the firm's name, the revenues, their website, and perhaps answer a question like whether or not you have a firewall, and you could get coverage and you could get terms. And again, it was relatively inexpensive. However, today it's a lot different. And if for any of you who are on this webinar who have already gone through your renewal in the past year or so, it's more like you're being strapped to a polygraph and having to answer a lot of questions with regards to your specific controls that are in your environment, and it's more invasive with just understanding your business overall, and often confusing, because the questions that one carrier may ask would be different from questions another carrier may ask. And I'm sure if you've gone through a renewal, you've kind of seen that. And the reason that we went from, hey, come on in and we'll give you a cheap coverage without asking a lot of questions, to, let's review you in detail, is really can be answered by looking at this slide. This is the ransomware trends from 2018, well, actually 2016 forward. You can kind of see in 2018 the beginning of an uptick, and then 19 to 21, kind of that hockey stick increase in losses. Obviously COVID was occurring over that time, which exacerbated that, as there was more working from home and exposing more system vulnerabilities to the bad guys. But there was also a increase in sophistication of what the bad guys were doing as well. The crime operations or the ransomware operations, were well run. They began using ransomware as a service. So the big guys could job out their ransomware packs to a bunch of actors who could use those to their own advantage. And so that exacerbated the losses here. And just to drill in it on a little more detail, this is the trends from the first quarter of this year. A couple things I just want to highlight. Typically when we think of, I know when I've talked to businesses about cyber insurance, and if they're a small, medium-sized business, they say, who really wants to get me? I'm not Target. I'm not Home Depot. I'm not Colonial Pipeline. Nobody will care about me. Well, in terms of ransomware, the median size is 168 employees. So it's really the small businesses and medium-sized businesses are being targeted here, and the average length of time it takes a business to recover is 26 days. So you can kind of think to yourself, what would happen to my own business in terms of profits, my ability to pay my employees, to pay my vendors, take care of my customers, if I were unable to do so for almost a month there. Another point that just to kind of highlight, I'm not going to go deep into cybersecurity issues, but you can kind of see the top two ransomware attack vectors is something called RDP compromise and email phishing. Many of you may know what email phishing is. That's when the bad guys send an email that encourage you to provide them with credentials or click on a link that really is malware. RDP compromise are basically open ports, and think of that as open windows in your house that are open that enable the bad guys to get in. And RDP is a special way that bad guys look for in order for them to get in, with a lot of success, as you can see here. So ransomware, the ransomware doesn't just. A lot of people think about the ransom payment as the biggest part of the costs, but in fact, the biggest part of the costs are really the costs that you have to bear as part of it. The cost to restore your systems, to figure out what happened, figure out, restore, get your backup if you have backups up and running. Yes, maybe having to pay the ransomware, but also those lost profits or extra expenses for that 26 days that you're down on average. And then if there's a data breach on top of it, you may have to consider the costs associated with notifying your customers with regards to this as well. So there's a lot of costs that go into it above and beyond any payment to the bad guys. We'll talk more about that later. But these costs were unanticipated when the carriers were writing and pricing their products. And you can kind of see what happened here from the insurance side here. So we're going to flip over from the cybersecurity and now the impact from the insurance. This is a graph showing insurance premiums. That's the bars for each year from 2015 to 2021 in premium that the carriers wrote. This is combined across the industry. And then the red line represents loss ratio. And the loss ratio is just the percentage of losses percentage of premium that are losses. In other words, they were claims that the carriers had to pay out on. And you can see 2015, the loss ratio was around 20%. In other words, the 20 cents out of every dollar that the carrier got in premium went to pay out in claims. It increased, kind of was a little bit, kind of in that mid 30s to 40%. And then it started going up to over 50% in 2020, actually rising above to 70% in 2020 here. And so it went from, basically in 2015 as an example, I was only paying out 20 cents out of every dollar to now I'm paying out over 70 cents out of every dollar. So how do I pay for my expenses that are associated with this coverage? How do I make a profit? And so what the carriers did, and we'll talk a little bit about this in more detail in the next slide, is they do what carriers do when they're concerned about the profitability. They raise premiums, and in fact, according to Fitch, their premiums increased 92% in 2021 here. So you can see that big jump in premiums on that last bar here. And you can see that it did have an impact on loss ratios. The loss ratios did go down, but they didn't go down to 30 or 40 or even 50%. They went down maybe a little less than 10%, which means that the claims costs are still increasing here. They just didn't increase as fast as the premium increase. And what that suggests is this is still going to be a challenging market from a cyber insurer standpoint. And you could expect to see pricing. You might not see a doubling in premiums every year going forward, but you're going to see increases every year or certainly in the near term as carriers try to respond to the increases in claims. You can see that in 2018 to 2021, claims increased 300%. So that's a big jump. Again, that's COVID related, but it's largely due to ransomware as part of that. So I talked, we certainly see that carriers raise rates. That's one thing that they do when things get tough. The other thing that they do is they lower limits. So you might have been able to get $10 million of coverage a couple of years ago. Now you're lucky to get 5, if even that. And some carriers decide, what, the heck with this. We're just getting out. They're either getting out altogether or they're deciding, I don't like this type of industry, so we're going to get out of this type of industry, or I'm going to get out of this size of firm, or a combination thereof. These are the kind of the tools that on a broad-based area that the carriers have. And they have one additional tool, and that is to pay more attention to the risks that they're writing or considering to write. And so I want to talk a little bit about that because this is you're seeing this now in terms of the applications and the expansion and the number of questions that are being asked. And from a broad-based basis, here's a few things that carriers are looking for. They're looking for business stability, continuity, and that goes into the underwriting and pricing aspects of it. Obviously, companies that have been stable, that are have been around a while, a good kind of client set, strong client set, higher retention will fare better in the underwriting process than others. Types and volumes of data. Certainly if you're a healthcare system or a medical billing system with a lot of what they call PHI or protected health information, that's very sensitive information that if exposed could cause a lot of damage and costs. So there's a higher look at that. Certainly financial information, accounting, credit card information, and then personal information such as Social Security and passport numbers, et cetera. So that data is being evaluated. The governance, how the business is managing its digital risk. How is that process? Is there a chief information security officer or someone who is focused, as part of their, that's part of their duties within the organization, or if it's outsourced, how is that managed? Is there a security policy in place, et cetera? The industry that you're in, certainly I've talked about healthcare and financial, those are certainly, tougher industries from a pricing and underwriting standpoint. Municipalities are also a tough class of business. Public education as well, and there's a number of other ones. A number of you are managed service providers on this call. You're in a tough class of business because of what's called the aggregation risk that you present to the carrier. Revenue size is the component that is the largest, probably the base from which premiums are created, and so revenue size plays into a large part in terms of pricing the risk. And then finally, the technical controls, and these are all the things that the carriers now want to, all the questions that they want to ask you about how secure your system is. And so their applications have gone from maybe 1 page to 5 pages or 10 pages or more. And for some businesses, they get that they may understand questions on the first page, but the rest of the pages they don't understand. They just hand it to IT or they hand it to their managed service provider and say, "Hey, can you fill this out?" But what are carriers looking for? And I just want to kind of review the basic insurability kit. And this is also a basic security kit, but carriers and not all carriers are looking specifically at all this, but these are things that for the most part they are. And I would encourage that if you're not in a systems person yourself, that you're writing these down and asking your IT folks or your MSP whether you have these in place, and try to get this ahead of time of your renewal if possible. The one first is multi-factor authentication. So multi-factor authentication is when you having to not only key in a password but have some other device in which you can code. It usually comes from your cell phone in which you key in to access the system. This is perhaps one of the most important parts of that carriers are looking for, and it's something that if you don't have in place, and some businesses don't, I know a number of law firms where the partners just don't want to be bothered by having to use something like this. and I can appreciate that, but it's almost table stakes these days if you want to be insured. Patching, this is where, you get those, if many of you on your cell phone or your laptop, you get the little red dot next to that gear, which says that you got to upload something. This is keeping your operating system up to date, especially those security patches are critical. Patches on other applications. This is again kind of a key thing that carriers are looking for here. Backups. We talk about ransomware. Well, having a good backup that you know and are confident in goes a long way in reducing the time it takes to get up and running. And so having a backup solution with an off-site backup as well as having data recovery testing is important. Firewall, that's usually companies have firewalls. It's all in the configuration and how they're set up and what they're blocking. And which windows are they keeping closed to the outside, and what services are they keeping out of there. Any virus protection tied in with endpoint detection and response. That really helps to identify and triage and hopefully limit malicious activity that's able to get into your system at the endpoint, whether it's a laptop or a server. It happens to make to a server. These things are now critical aspects of what you should have. Email filtering, what's called DNS filtering, and you don't really need to know what these initials are. DMARC, SPF, DKIM. Just give those initials to your IT person. Say, hey, make sure that we have this in place. That really helps you in terms of spoofing and some of those social engineering and e-fraud claims, in addition to just general phishing exploits. Encryption is also big, making sure that your laptop is encrypted, so when you leave it on the train and get off and somebody picks it up, that they can't access and make sense of the data. 86% or so of cyber incidents are based on created by humans, either by clicking on a link or misconfiguring a system that exposes data. So security awareness training and phishing simulations are critical as well. SaaS security. So SaaS stands for software as a service. And more of us, or especially if you're in a small business, but not even that anymore, are using cloud-based tools. We're using Office 365. We're using Salesforce. We're using QuickBooks. We're using other tools that are SaaS-based tools that contain data relative to us or to our customers. And it's important that you have mechanisms to lock that down, because you don't want to create the opportunity for the bad guys to get in there. And that's a growing area that you need to focus on. And certainly last but not least is having a good incident response plan. And I also recommend that you test the plan so that when the ransomware hits the fan, you're not sitting there trying to figure out what to do. So this is your basic insurability kit. And again, if you're running a business, I don't expect you to know all these things. Just note them down, give them to your IT professional, and make sure that they're working on a plan to kind of get this in running. It may be something that you'll have to stage over time, but if you want to be insurable, you're really going to need to focus in these areas here. And actually, if many of your clients may be asking you these questions as well. I've seen that occur. So we've talked about kind of the history and what type of controls carriers are looking at and that you should think about. I want to talk about the how much coverage do I need, and the with regards to that, for smaller firms, what I typically say is minimum of $1 million, and $1 million. And the reason I say that is if you're suffering a ransomware attack or any type of attack, you're going to have a combination of the costs that are associated with that attack directly, as well as perhaps some lost profits or increased costs. So you can see here, here's some average SME, so this is small business cyber insurance claims costs that an organization called Net Diligent produces on an annual basis. And they pull data from many carriers to come up with these numbers. And so you can see, an incident with a business interruption or ransomware with a business interruption, that's getting you close enough to $1 million that you might as well make sure that you have that in place here. For those firms that are, whether you're small, if you're in kind of that financial industry type businesses or healthcare, you're going to probably want to look at higher limits in at least the 2 to 3 million range. And then as the firm gets larger, you're going to want to look at certainly larger limits. As I say, many carriers are on what they call a primary basis. It may be tough to get beyond 5 million in coverage, and at that point you have to look at excess. But that's really going to be for the larger firms here. Want to talk through some coverage and application traps. A lot of times businesses get a quote for coverage, and they see a bunch of things on the page. There's a copy of the policy, and all they really focus on is the premium. And then they look at the page with the premium from one carrier, they look at it from another carrier, and they pick the premium that's lower. And that's a way to make a decision, certainly, but it may pay to really review the coverage and make sure that you know what you're getting. We do a lot of policy reviews at SeedPod Cyber, and quite frankly, it's scary sometimes what businesses have in terms of cyber and really how exposed they are from a coverage perspective. So I'm going to walk through a few. The first is, you buy your $1 million of cyber coverage, and you think you're set. Doug told me to buy $1 million, so I went out and bought $1 million. And but what you didn't realize is there was a sublimit for cyber extortion, which is ransomware, of $100,000, and then you have a ransomware attack. And you suffer the average cost of $200,000 plus in expenses, and you go in to submit your bills, and the carrier says, "Here's a nice check for $100," and you're saying, "Well, no, I actually had $267,000, and I've got $1 million in liability and in limits," and the carrier says, "Well, no, you don't. You have $100,000 here." So make sure that you're looking through the sublimits and the various components. I would pay particular attention to that cyber extortion sublimit. I would also pay particular attention to the business interruption to see what that level is relative to that million or whatever level of limit that you purchased. And there's something called contingent business interruption. So that's coverage that provides you, that offsets lost profits and or extra expense in the event that a vendor that you're relying upon, critical for your business, suffers an attack. So you want to kind of see what that coverage is as well. There's obviously a lot of different other components there, but those are some ones that you'll want to look at. Policy like a CIV, or actually a CVE in this situation, where the coverage is could be porous, is there's some policies that are written that they'll say $1 million worth of coverage, but then you read the exclusions, and the exclusions will exclude any attacks that where the vulnerabilities were higher than a certain what's called CVE number, and this is a vulnerability that's been coded and articulated by the government, by the governmental agency, and certain numbers may mean that you didn't have multi-factor authentication in place, or you didn't have some type of vulnerability addressed, that maybe your systems weren't patched, and the carriers will deny it. So you want to review your policy up front to understand what those exclusions are and not find out when you go to submit your claim. Fraud by any other name. There was actually a case that just came out, I think last week or the week before, with regards to the difference between social engineering and computer fraud. An insured suffered a social engineering loss. In other words, someone defrauded the organization, pretended to be, I think it was a vendor or a client, and induced them to pay them they changed the wiring instructions and induced the company, the insured, to pay, I think it was $500,000 or so. Well, they had $100,000 of social engineering. They then looked and found that they had $1 million of computer fraud coverage, and they tried to say this was actually computer fraud, and the court refused to agree with them because of the difference in the language. And you're really going to want to understand the language for the various types of fraud components to understand what is computer fraud, what is systems fraud, what's funds transfer fraud. There's a number of components there. Make sure you understand that there. A good deed never goes. This is actually more specific to a managed service provider. This was a managed service provider who suffered a cyber attack, which infected a number of his clients. And the firm did what they thought was the right thing, which was to go in and try to fix their clients and get them up and running as fast as possible. They spent $1 million in doing so. They went to turn around and presented that $1 million to the carrier. Their carrier said, "You're not covered because you didn't receive authorization from us to go into your client systems to do that there," which is what was required by the policy. So you need to make sure, not only that you know what will happen to trigger coverage, but what you need to do when a covered event occurs. What are the steps you need to do? And that's why having that incident response plan in place, testing it, making sure when you reach out to your carrier and knowing that is part of your process here. Next is, we talked about something that happens when an incident occurs. Knowing that you're covered for the services you provide is also important. And I've seen this more with our managed service providers, that they have what's called Tech E&O, technology errors and omissions coverage, and the definitions of what technology services does not in some cases reflect what that MSP does. And so they're buying something, they see Tech E&O, they think, that's what I need, so that's what I have. But if there ever was a claim, they may not be covered for the services that they're being sued for. And so you really want to make sure that you understand what is covered and how that aligns to what you do here. So I've talked through some coverage traps. Want to get into briefly the application ABCs. And here, because the applications have become longer, they become more complicated, more frustrating, and they're not the same across the board here. And why is this important? Well, there was a case that came out recently in which a firm said that it had MFA on its critical systems and assets, and it filed for a ransomware claim. The carrier came in, found that they did not have MFA on its critical systems, only on its firewall, and so are rescinding coverage there. And so making sure that your application is complete and accurate is important if you want to make sure that you're going to have coverage when claim time comes. And there's just a couple things to really think about here. Did it kind of in the mnemonic ABC. These questions can be confusing. Don't hesitate to pick up the phone and ask the carrier if you don't understand the question, or certainly ask your broker. and get him or her to do so. Be honest. There's nothing. You're not going to gain anything by saying you have multi-factor authentication when you don't, because you just won't be covered. So, being honest with regards to what you have and what you don't have is just a good practice in completing these. Collaborate between IT and business. There are IT questions, these technical questions. There's also business questions. If you're a business owner, you don't want your business questions to be answered by your IT folks, and so you should be answering those, and you should be getting together and review it. It can become a great opportunity to understand where you have deficiencies within your security environment and what the implications are, not only in terms of getting insurance, but in running business and maintaining your reputation. So these are some areas that I think that you should think about. And then there's finally three things. So just, I've gone through a lot in a relatively short amount of time here, but there's three things that I'd like you to kind of take away. And the first is, in terms of cyber insurance, because of how complicated it's getting, you really need to have someone who understands both insurance as well as the cybersecurity. You may have a great broker working with you who's expert in a lot of other parts of your business, but if he or she doesn't have the expertise or can't bring you the expertise for cyber insurance, you may want to explore other options here. Make sure that you have a strong IT team that knows cybersecurity. This is, whether that's your managed service provider or your internal team, they may not have all the skill sets with regards to cybersecurity. Make sure that that you are asking whether they have those skills and whether they are providing or can provide you solutions with regards to cybersecurity. And then I think last, as a business owner, recognize that you are now running a digital business. If COVID has taught us anything, it's taught us as business owners that every business is now a digital business. That we are, dependent upon our digital infrastructure to make the products and the services that we provide, and our customers, need our technical infrastructure in order to transact business with us. We can't just focus on other aspects of risk or opportunity in our business and not focus on the risks from a digital standpoint. So that's basically the presentation. I appreciate you for spending the time, and would love to talk to you about the services that we provide, whether you're a managed service provider or a business with regards to cyber insurance. And I don't know if we have questions, but I'll pause and turn it over to Kathleen.
Yeah, thank you so much, Doug. That was awesome. A lot of useful information. We did get one question in the chat. Are carriers acknowledging attestation to a standard?
Are they acknowledging attestation to a standard? I think that the answer is they're acknowledging attestation to their standard, but their standard will vary among carriers. So they may have, as in the example with the travelers, carriers are reluctant to rescind coverage or to deny coverage if there's a lot of gray, and there's been a lot of claims that have been paid out where there has been gray. It's just been tough, and sometimes it's because the carriers didn't word the question appropriately, or it was unclear that the answer was suggested that perhaps the applicant responded truthfully there. But they are going to be looking at how that attestation is they have in their mind what they want to see in that question and what the answer to that, how that will impact their underwriting process. And they have that in their underwriting guidelines as they go through it. And at claim time, they have it on their claim line, what they're going to be looking for at claim time too. Unfortunately, there is no standard application, as anybody who's looked at the applications can tell you. And so there's no standardization of questions. And there's no standardization of what's acceptable or what's not acceptable among the carriers. They haven't agreed on that yet.
All right, thank you. And since we have a little bit more time, I have a few frequently asked questions to ask. Oh, we just got another one, so I'll do this one first. Do MSPs get additional coverage for their clients or just for their own company?
The MSPs buy coverage for themselves, so their Tech E&O cyber policy will cover cyber events that impact them, or will cover suits that fall under the category of technology errors and omissions here. And then it's up to the clients themselves to purchase their own cyber insurance, and I recommend that businesses certainly do so because they're all digital businesses these days here. But they are the coverage that an MSP buys does not just flow down to the client necessarily. There are certain cybersecurity services solutions that offer some type of warranty protection that may cover businesses who have those solutions in place with some level of protection, but they really should be looking at their own cyber insurance. It's a separate policy.
All right. And I think we have someone else typing, but in the meantime, Doug, should you pay the ransom? The first reaction should be no, we're not going to pay the ransom. The first reaction should be how are we going to get ourselves up and running? Once we understand what's actually happened, how do we get it up and running, and without having to go through and pay the ransom? I think it's not a question that can just be stated, absolute. There's always going to be extenuating circumstances. The most obvious is you don't have a backup, and you need, you've determined that it's impossible for you to move forward just starting from scratch. Although some companies have done that here, but it's something that you should think carefully. Obviously, consult with your insurance carrier, legal counsel, and by the way, when you're consulting legal counsel, use lawyers, and typically they're recommended by the carriers, but use law firms that are familiar with cyber liability and ransomware in particular in this instance here. And also, often you should, if not all the time, you should bringing in law enforcement because they can really help out. They've negotiated or been involved in negotiating with a lot of these crime syndicates. They'll know there's going to be some that are better than others in terms of what they'll give back. But like I said, the first response should always be no. But you really need to evaluate it, kind of as you determine the impact and your ability to recover from the impact. Right, thank you. What if, say I'm a company and I don't have the required controls in place? Does the carrier give you time to get those controls in place?
They used to. They used to give you time. Nowadays, it's hard to find those carriers who will, unless you're a renewal. Now, sometimes carriers treat their renewal customers different than new business. But certainly, if you don't have some of those basics, such as multi-factor authentication in place, you would be hard pressed to find a carrier who's going to be willing to kind of give you 60 days to get that done. You're going to want to get that done ahead of time, and really, the cyber insurance process should start at least 3 months ahead of time as you start to evaluate the controls that you want or may need to have in place that you don't have.
All right. And we got another question. I'll read it off. MSPs are in scope if you have access to critical information of your clients. When the pasta hits the fan, the insurance company, clients, and the party seeking reparation will go after all. Think about your question. This is one of the major reasons IT companies are having trouble getting good coverage. It's one thing to get coverage for your own problems, another when your client gets in trouble and you are in the mix.
Well, that's, I guess, more of a comment than a question, but that's certainly correct. From an MSP standpoint, when your client has an incident, you're going to be in the crosshairs, whether you were a party or responsible to the incident or not. And you need to make sure that you have adequate coverage that can defend you if you need to defend, or that can cover the liability if you certainly are part of kind of that liability chain that led to the incident. So that is I would say that's an accurate comment.
All right. And I'll ask one more question since we have a little bit of time left. If I had a claim last year, will my current carrier cancel me?
Well, it depends like anything. It depends on the type of claim, the nature of what led to the incident, the size of the claim, and whether you've had other claims in the past or what type of business you're in, and certainly the appetite at the time of the carrier for covering it. So there's a number of factors in place. You do, if it's a larger claim, you should expect to receive a non-renewal notice. Hopefully, it should give you enough time, but you should be first of all mitigating whatever vulnerabilities were exposed through the incident, and preparing yourself for that. Working with the client, we're working with the carrier through the claims process to help to get it speedily resolved, so that you're showing that you're a good partner with regards to that. But then you also will want to make sure you've got some other options, and you may not have no other choice.
All right. Doug, you think we have time for one more?
Sure.
All right. What would pricing look like for a small law firm?
Well, I hate to use the answer, but it depends. Here, pricing for a small law firm is going to be based on revenues and as part of it, and the security stack they're in. But you're most likely going to be looking at that $3,000 to $5,000 range.
Right. All right, so we'll finish up. If anyone has any other questions, you can feel free to shoot them over to info@SeedPod Cyber, and we'll get back to you. But I think we'll end it for today. I want to thank everybody for attending, and we hope to see you at our next webinar, and hope you all have a great rest of your day.
All right. Thanks, everyone. Thanks, Kathleen.